Hello, ladies and gentlemen. Greg McCloskey from ForexLive.com. This is a Forex quick look. I'm going to take a look at the dollar versus yen. Dollar versus yen is on its third day to the upside here after bottoming down here near a swing area and well above the 100-day moving average. On the daily chart, the 3 days move to the upside has came up to test a swing area and the 61.8% retracement. That swing area comes between the 142.23 and 142.65.8 level, and the high price yesterday came up to that level and rotated back to the downside. That area is defined by swing highs through here, which then moved to the downside. We moved back into that swing area here in the month of June and then moved above it and used that level as support here. And then in the month of July, the price fell below the level and moved down to the 100 and 200-day moving averages, where support buyers came in, bought against those two moving averages there. As I mentioned yesterday, the price came up to the high of that swing area, getting above the 61.8% retracement in the process, but could not extend above that level. But in trading here today, we saw a base and we saw the price move further to the upside, especially in the early New York session. We are seeing yields move higher, with the 10-year now up around 6 basis points. The 5-year is up about 5 basis points, and the 2-year is up about 3 basis points. So we are seeing increased yields, which is helping to push this currency pair to the upside. Now let's see what the 49, 61.8, 65 level looks like on the hourly chart. And if I go to that chart right here, this area right here between these two red lines shows the 49 to 65 level, and as mentioned yesterday, the price came up to the high of that area, rotated back to the downside, and then rotated back up in the Asian session and trading here today. In the European session, the price came down and tested the 49 level here before rotating to the upside. So the 61.8% retracement, the high of that swing area, was a consolidation area in the trading here today before basing against it and pushing to the upside over the last 3 hours. Again, yields are helping out to push that pair higher. What next? Well, the next key target for this currency pair comes in near this area right through here. This area is defined by swing lows, or a swing low through here and a swing low here. We fell below that area and found resistance here and here before we really started its rotation to the downside here. So break, retest, move to the downside. That is what you want to see, and that level is what we're moving toward right now, between the 143.44 level and 143.54 level. So those 10 pips get above that level, and we start to look toward this swing area up through here, where we have a number of different swing highs and lows again developed through here. These are the swing highs, and then we find these swing lows. I'm having trouble with my arrows here today, but we find a lot of support buyer in there. Admittedly, we break below it here but fail. We then reestablish here, and admittedly we break below it here and fail. But as you can see, it gets a little sloppy right here, but the last thing that we do right through here is find sellers, and boom, to the downside. The momentum starts up and we start to move into the downside. So going forward, this area are going to be the next targets on the top side. What would hurt the bullish bias? Getting below the 61.8% retracement on the daily chart. That's at the 49 level. Getting below the 142.65 level ahead of that would also be hurtful to the bullish bias that we're seeing in trading here today. So there you have a complete look at the dollar versus yen. The buyers are obviously in control. We're looking up to the next target level, up to the 143.54 level, and then we'll look toward the 144.12 to 23 level. That opens the door for that type of move. My name is Greg McCloskey. Good fortune with your trading. Bye-bye now.